Hi, I'm Ashley from Federation Asset Management. I'm pleased to be joined by Daniel Foggo, founder and CEO of RateSetter Australia. Daniel, tell us a bit about RateSetter.
Very simply, RateSetter is an investment and lending platform business. We lend to consumers for a range of purposes, predominantly personal loans, renewable energy loans, and loans for automotive purchases. On the investment side of our business, we offer investors a fixed income return up to 8% in the current market, which relative to bank rates is very appealing. We also have a broad range of funding sources. So that starts with retail investors. Mum and dad investors can participate on our platform with a relatively small amount of money, all the way through to fixed income funds, to banks investing. We've got the government's Clean Energy Finance Corporation funding a specific type of loan, some specific loans, and we've also established our own warehouse facility.
So Daniel, who is a typical RateSetter borrower?
We fund a very broad range of borrowers. The average borrower is about 41 years of age. They're typically borrowing about $17,000, but there's a range of purposes for which they might be borrowing money. I think the most important factor there is that we're lending to creditworthy borrowers, what might be described as the prime borrowing segment.
And who is a typical RateSetter investor?
I don't know if there's a typical RateSetter investor. We do service a very large range of investors. That starts with your millennial investors investing a relatively small amount of money through to SMSF investors investing a larger amount. We've really established a platform that can serve different investors with different needs at different times.
RateSetter is one of the fastest growing non-bank lenders in the country. What sets RateSetter apart from its competitors?
I think at the heart of what differentiates us is our technology platform. We are able to operate very efficiently through the technology that we've built. That means we can pass on a lot of the economic benefits from that efficiency to both our investors and to our borrowers. And it also means as a business, as we scale, there's a lot of operational leverage, which can really help drive profitability over time.
So Daniel, how do you think about the scale of opportunity in the market?
It's a really large market, and we're really just scratching the surface at the moment. You have to break it down into the different areas of our lending. I mean, I'll start with automotive finance. There's nearly $50 billion of automotive loans outstanding in Australia. We're really just ramping up our growth in that part of the market, and so there's a long runway to go there, even if the automotive market isn't growing rapidly. And then if we look across renewable energy, there is there's by our estimates, many billions of dollars invested every year in renewable energy equipment for households. We are the largest provider of regulated loans into that space, but we've still got a long way in terms of growth and penetrating it as deeply as we think we can. And then the personal loan market is actually really quite large, and you've also got a lot of credit card debt outstanding, and we're definitely seeing a trend away from credit card debt into other forms of finance. That's led to some really strong growth in the personal loan market. So, in aggregate, we're looking at nearly $100 billion market opportunity in terms of where we're lending, and the $800 million we've funded to date in a loan book of about $400 million. We really are just getting started.
A key element of RateSetter's business model is a provision fund. Can you explain its purpose and how it works?
The provision fund's really been established to make it a safer investment proposition for our investors. Essentially, we operate a bit like a bank in that regard, in that when we lend money to a customer, we provision for losses in the future. So as part of the customer's, the cost of their loan, we embed either an upfront fee or part of their interest rate that's not paid to us as the lender, but it goes into a fund we call our provision fund. Essentially, it acts as a first loss piece in terms of protecting investors in the loan book. It represents about 6% of our loans outstanding currently, and when you contrast that to our loss rate historically, it shows it provides a really good element of protection for investors. Our proud track record is every investor with RateSetter and investing via the RateSetter lending platform has received every amount of interest and principal back because of the provision fund, and that's a track record we're very proud of and something that we do expect to continue to achieve over time.
So RateSetter has recently established a warehouse facility. Tell us about it.
Sure. So we've been very focused on scaling up our automotive lending business. we decided some time ago that the right way to do that was actually to use more traditional sources of capital in that regard. So we worked with one of the big four banks and two mezzanine providers, and we established a facility at the back end of last year, which has given us a much larger runway and visibility in terms of our ability to grow that part of our business. The good news for our customers is it's a relatively low cost source of capital, so we're able to pass on some of those benefits to our customers. So we're now out in the market with what is typically the lowest rate. If you go to a rate comparison site or you go to one of your brokers and you're a good credit customer, then in all likelihood they'll be offering you a RateSetter loan at the moment. And it's also good for our business in terms of lowering that cost of capital, bringing in further diversity in terms of our funding, means that we can also make better margin on our loans.
So COVID-19 and the associated lockdowns have had a big impact on Australian businesses and individuals. How has RateSetter been affected?
Well, we are a technology-led and online business, so we've absolutely been able to continue to operate. At the end of the day, we're a credit business and we're measured on credit performance, and I think that's what we've been most conscious of during this crisis. Pleasingly, we have not seen any change in our arrears, so the loan book is performing exceptionally well. I think if one's looking forward and trying to get a sense of what that might look like over the next 18 months, and any fallout as a consequence of COVID, one looks at how many customers have gone into hardship arrangements. And the answer there is exceptionally positive. In our personal loan book, the number of customers versus the broader industry and hardship arrangements is, by our estimates, or we know it's around half the industry average, including the big four banks. Across our renewable energy loans, a very small number, and similarly our automotive loans, very small. So we actually feel like we've weathered the storm exceptionally well from a credit perspective, and I think that's symptomatic of the approach we've taken to who we lend to over time. And those, the borrower characteristics that we talked about earlier. We definitely saw a lot of a drop in demand as we went into April and for parts of May, but there's been a really strong recovery since. So really pleasing in terms of how the business has performed and seeing that recovery in the markets we're in. This month is actually going to be quite a strong, or June is going to be quite a strong lending month for us, and may well be by July we're sort of setting records again. So definitely a short-term blip from where it sits at the moment, and hopefully the virus is contained and this trend continues. I'd also add we've been preparing for a downturn basically since we first started lending back in 2014. That's really around who we're lending to and provisioning for losses. So the provision fund had sufficient capital in it to cover our expected losses. Even when we expected unemployment to be well above 10%, we were still confident that our investors would continue to get every amount of interest and principal. So the provision fund is a key component of our business model there to make sure that we're really well placed to operate well and continue to serve our investors during these tougher times.
The renewable energy lending part of the business sounds really interesting. Do you mind telling us a bit more about it?
Sure. So we looked at the renewable energy market about 4 years ago, and we identified it as an area we wanted to expand the business into, in part because the credit characteristics are exceptionally strong. These are people who are typically saving money over time when they invest in this equipment because of the pure economics of saving money on your power bill. Secondly, we thought it was the right thing to do from an environmental perspective. So we did actually approach the CFC, the government's Clean Energy Finance Corporation, to ask if they would support us in designing a regulated loan to help households purchase this equipment. That's gone really well. We've subsequently built relationships with a lot of different installers and referrers, and the success of that program early on led us to actually win some really interesting contracts. So first of all, one of those is in South Australia, where we're now administering $100 million of subsidies for the South Australian government to assist households in purchasing solar panels and home batteries. And also we're running a pilot for the New South Wales government in anticipation of a scheme that they expect to be running, the Empowering Home Scheme, where they expect to be investing $3.2 billion into household renewable energy equipment. So it's great to be part of that, managing that program with the government. And hopefully we're part of the final program there, because that would be really quite significant for our business.
Thanks for your time, Daniel. Where to from here for RateSetter?
So, really when we look, over the last 5 years of our business, we feel we've been putting the foundations in place to be a much larger business. And that's around credit, it's around technology, it's around making sure we've got diversity of funding, and also diversity in terms of where we attract borrowers from. I think we've locked in those foundations. We feel like we're in a really strong position to really focus on growth now. So the next 5 years for us are really about becoming large, being really relevant in the Australian financial system. And I think we're really well placed to expand our business. We've got the right ingredients, we've got the right people. So we're really excited, and we have always looked at this business in 5 and 10 year increments. There's a very large opportunity in consumer finance in Australia. So really it's just about execution from here and making sure that we do achieve all those things that we think we're capable of.